Hi guys, welcome back to the channel. If you're new here, let me give you a quick summary about what's going on. So a few weeks ago, I started a dividend investment portfolio where the primary focus of this portfolio is on the monthly dividend income. On top of that, I started a $10 a month dividend challenge. So I'm looking forward to earning $10 a month consistently as long as these companies don't go out of business or cut their dividend. Last week, I showed that I was $1.75, and this week we're gonna show where my progress is in terms of that earning that goal. Okay, before we get into the monthly dividend earnings, I want to talk a little bit more about the dip that happened the past couple of days. If you haven't been aware, the market has went down several points overall. Now, when I looked at the strategy for this portfolio and what made sense, I noticed that a lot of the stocks in this particular portfolio and the ones on my watch list for this portfolio did not really go that much on sale. They were at most maybe 1 to 2%, and given the different ranges of price, it would have only made a difference of a few dollars overall for right now. So it didn't really make sense for me to go ahead and take a lot of capital and pump it into this type of my holdings so far, because it just wouldn't have made a big difference
per share.
Another reason why I did not go and add a bunch of surplus capital to this portfolio is because the whole point of this is to do a newbie investor in portfolio. Now, most newbies are not going to have reserve cash on hand, a few $1,000s to put into their portfolio to take advantage of this, some type of dip like this.
And unless I was willing to buy in bulk, I wasn't going to be able to really take advantage of that. So I would have to at least bring 1,000, 2,000 or so just to take advantage of the discounts or the dip that was going on. Now, I have another account, a Robinhood account, and now that one I was able to do. I was able to take advantage because I was picking individual stocks, and I was looking for discounts of 5% or more, and I was able to pick up a few of those. So that was good. And again, the strategy for that portfolio is different from this one.
So in this episode, let's dig right in. Right away here, we have the portfolio in front of us, and we're going to check out the overall gains so far. And we see that I'm down 0.17%, which isn't much, nothing to cry over. And we can see that there's a dip here at August 5th. Let me just fix that.
Okay, so you can see that I took a little bit of a loss, but I came out, I rallied, and I'm back on trajectory with what I had before prior to that. And I realized that during this time, a lot of different investors probably either sold because they were worried, and they just wanted to have the cash at hand, or they doubled down and they put a lot of money into it. And that I did not do that. Focus of this portfolio is for the intro investor.
And part of the reason why I'm doing this series is so that you can see it for yourself and see how it works before you even jump into it. You have the ability to see how it grows, track it, and then make the decision whether something like this is for you, this type of strategy, and you can learn more about these companies and become a smarter investor. Another thing I wanted to bring up is that, although you could invest, there's different strategies you can do. This strategy is trying to maximize the dollar amount that's put in to the output of the dividend. Now, there are other dividend strategies out there, You could pick every single dividend aristocrat out there and build a portfolio just around that and just keep pumping money in that. And sure, that is going to perform. That is going to give you what you want, and it's going to be sustainable and long term. And you won't have to worry about it, right? Because these companies are vetted and they've been proven that they can last a series of 25 years or so. However, that approach is a little bit more costly than what we're trying to achieve here. Their stocks command a higher price, and rightfully so. They're good companies, and they command that because of the demand that they have. Another approach you can do is to invest in an index fund like the S&P 500 or any of the Vanguard funds. I mean, those funds will perform for you. They'll produce you 4%, and you don't have to worry about it. I'm going to take a closer look at the REIT sub pie here. Now, with this particular holdings, for example, if I try to take advantage of the discounts regarding Apple Realty Corp, I would have to wait for the complete filling of the rest of the holdings within that pie before it would come around and start buying up Apple shares.
With M1 Finance, you have to understand that a lot of the features that you don't have control over is because it's auto investing, and so because of the way it's set up and it has a pie, you're not able to really control that. It's cyclical, right? And that means that what's going on is once one part of your pie is complete, is filled, is brought to weight, then it will approach the entirety of the pie again, growing it before it moves on to the next segment.
Okay, now without further ado, the real reason why you're here, the real reason why you've watched up until this point is to see what's going on with this dividend challenge. And so we check out the gains, and boom, right off the bat, you see earned dividends $12.05. Now we surpassed our $10 challenge, and this is ecstatic, right? This is what it's all about. You want to embrace and celebrate any passive income, whether it's $1, $10, $100, $1,000, whatever that amount is relative to your capital amount. It doesn't matter. You should be happy that you're making any passive income at all. What it really is, when you really break it down, it's your money earning you money. And so I would be remiss if I just rested at this point and said, okay, done deal, let's move on, nothing more to do. No. I'm going to now start a $20 a month dividend challenge. So we're increasing it, we're doubling the amount. And although it's only a difference right now of $8, it's still going to be double from my original challenge. So that's the goal.
You can really build up your wealth by investing, and so that is not something you should take lightly, no matter how much it is. Now, a lot of you are going to say, hey, $12 is not a lot, that doesn't change my life. And maybe you're right, maybe it won't, but this money now at this point, if you take this and you set up an account, you have M1 Finance, throw this $12 into a separate account, you can take from that account and say, hey, I'm going to buy, I don't know, 2 cups of coffee a month. That's going to pay for your coffee habit. Or maybe it's going to pay for lunch. Or, perhaps if you go to Planet Fitness, it's going to pay for your gym membership for the rest of your life. Given that these companies don't go out of business or they cut their dividend, you have now a gym membership payment that, they charge $10 a month. You have that covered. So for the initial investment of about $2,000, you will have you will have a gym membership for the rest of your life. It's not free, but you don't have to worry about paying anything that you wouldn't have paid. And by the time you go to sell or anything like that, you can get all your money back, given that you sell at the right time. So obviously don't sell when your stocks are low, sell them when they're high.
One other thing to keep in mind, especially in relation to what we had talked about before with the dip of the market and getting all these these stocks going lower in price and where things fit with your investment strategy is that you do not make or gain money unless you sell your stocks. Okay? And so what that means is that as long for that particular day, they're showing you whatever the market is reading, whatever numbers that you're seeing is saying that if you sell the entirety of your portfolio, this is what the value you're going to get at this particular moment in time. Now, if you wait a few days from then, that value could go up, it could go down, but sure enough, one of the days, because the market is cyclical and because it goes in a cycle, there's going to be a day where your value is going to completely restore or surpass what you've originally put in. And if you sell it on that day, then you'll make a profit. But you don't. The point is you don't gain or make a profit until you actually sell it. However, with dividends, the way I'm doing with this strategy is that regardless of whether I sell or don't sell or hold, I'm making my dividend. So as long as I hold it, just to be clear, as long as I hold it, I'm going to be making my monthly dividend. However, I don't really take a loss or a gain until I actually sell it. And so, technically speaking, I'm only making a gain because of my dividends. When it comes time to sell anything, then that's when we'll make a determination of whether that purchase was a good or not for me. Okay, now let's look at the top earners for this month. Really quickly, guys, if you like this content, give it a like. Leave some comments down below. I want to see the ticker symbols of the stocks that you might have in your portfolio, or if you like any of the ones in mine, just make a comment. Put a little ticker symbol there, and let me know what's going on because I want to start a conversation about investing, and it's got to start somewhere. It's got to start with you guys. So, no matter how you want to express what's going on, let me know down below. I'd like to respond to some of the comments. As you know, Apple Hospitality REIT is my largest holding, and so it should be the largest dividend producer. Doesn't always have to be that way, but in the way I structured it here, it is. So at $10.20, they were the main bulk of that monthly dividend amount. That's good there. Alright, moving on. Gladstone Commercial Corporation. They've provided a $1.75. We knew that from last episode. So we're just building onto that. And lastly, Realty Income Corp. Now they're new to the portfolio, relatively new, and they're providing 10 cents, which isn't bad because I only have about a share and a little bit there. So that's really good, and they've started producing right away, so I can't complain about that. But I just want to point out here that you can see that the cost of a company like this is much higher than one for Apple Hospitality REIT, and that's because they've had a longer track history and they've increased their dividends consistently over time. And because of this proven stability that they have, and their portfolio is very good. Just speaking on both perspectives of the portfolio they offer and the numbers of what the market is seeing, they come around with a very good package and what they're trying to do. So they're commanding a higher price. Now, I introduced this to the portfolio in order to work in balance with Apple Hospitality REIT in order to make sure that my overall equity is staying pretty healthy and pretty strong. And you can see that's already the case based on the numbers that I'm getting. So as Apple Hospitality REIT might fluctuate greatly and lower my equity amount, having Realty Income Corp into the portfolio with Apple Hospitality REIT balances that out and makes sure that my equity doesn't drop too much. Okay, guys, that's going to be it. So I'm hoping that you found this valuable as a newbie investor and as someone more experienced. If you're an experienced investor, I hope you found some insights here that maybe you didn't think about before. So please give it a like, hit the subscribe and notification bell so that you get my posts when I post them. And with that being said, I really want to get a conversation going. I really want to talk about investing. I really enjoyed the topic. So if you guys leave any comments, I will be sure to respond. And if I don't respond, I'm sure there's other people who can answer your questions as well, and they'll be happy to because it's a very exciting topic. I mean, every it's your money making your money, and I don't know what gets better than that. So anyway, with that being said, guys, I hope you enjoyed the content, and until next time.